All right, shareholders, welcome back to another weekly edition of the Saturday Sendout from the Simple Side. I've had lots of subscribers joining over the past month, just like last month, and I just want to give everybody the opportunity to let me know what they think my newsletter needs. So you can click this button at the very top of my newsletter, thesimpleside.substack.com, to go find this newsletter. You can click this button, it'll take you to a survey, and you can let me know what you want to see in my newsletters, what you would like me to post about, anything you want me to add, take away, and I'll do it for you. I'll do it for you. I want to give the people what they want. All right, let's talk about what I have upcoming in terms of newsletters. So I'm going to be releasing the 3 portfolios that I run. One of them has already been built. The post has already been put together. The newsletter has already been put together, and it is going to come out next Wednesday. So be on the lookout for that. This is the safe portfolio. So this is the one that you want to build and set and just not have to worry about. And then we're going to get into my investing strategies. I'm going to talk about profit sharing with founding members in an upcoming newsletter. And then we're going to talk about the paid subscriber giveaway that's going to be happening in December. I'm going to try to give a little Christmas present to one of my paying subscribers as a thank you for being a paying subscriber. All right, and I don't want to skimp on these newsletters, so they may take some time to get out. I am a one-man team, but I want you to know that it will be worthwhile. My current contrarian bet portfolio has returned 17% monthly. You guys have seen the trades that I've made in there. I've been posting about them quite a bit. But if you cannot get access to all that, if you're not a paying subscriber, go ahead and join now. Things are actually quite a bit cheaper than most of the other Substacks on the platform, most of the other newsletters that run. A lot of financial newsletters charge $40 a month at a minimum. A lot of them are charging $500 a year-ish. And I'm only sitting at half of that. $20 a month, $200 a year, go paid. It pays for itself 10 times over in just one trade. All right, let's talk about the weekly recap. If you don't know, the weekly recap recaps all of the buy opportunities that I thought I spotted last week in the market, and I've been tracking these returns against the S&P 500 for about the past 9 weeks. In August, I took a look at how the buy opportunity that I saw in the market would have performed if they were held on a monthly basis, and the returns were 27%. I had a good pick that was up like 70% or something crazy last month, so that was incredible to see. But right now, if you would have invested $10,000 in all of the stocks that I've been talking about every week since I started this, your portfolio balance would be up from $10,000 to $10,848, which is an 8.48% return. Not too bad at all. If you invested in the SPY instead, the SPY, which is the ETF that tracks the S&P 500 index, you would be at a value of $10,174, which is only a 1.74% return. So as you can see, I'm about 7 percentage points above the SPY currently, and I hope to keep things that way. This week, like I said, we've been averaging 8.48 over the past 9 weeks, which puts us at an annualized rate of 49% returns. Now, I doubt this is going to be the case. I'm sure that things will start to equalize as time goes on, but if we can keep this same pace, we're going to be sitting at around 50% returns by the end of the year, which is awesome. So there's a couple things that I do, a couple of reasons that I do this newsletter, and part of the reason that I do this weekly recap is I want you to know that things that I'm talking about in my newsletters are actually valuable. I'm not just like some of these other financial newsletters that just shill you a different stock every other week and then never talk about what's happened in the past unless it's something that they won. I have recorded everything for 9 weeks, and I'm showing you the winning numbers, the winning values, and the times that I lose as well. I just want to show that I'm transparent on this platform. A lot of people on here that claim to be financial gurus or claim to be incredible, that claim to be beating the market, aren't beating the market at all. Actually, there's no proof. They just say, "Oh, look at all these things that I've done." But if you go back and look at their newsletters, there's no proof. So I am one of the only newsletters that has recorded everything 100% transparency every week, and I'm going to keep it that way. Wins, losses, anything else. All right, so the newsletter portfolio was outperformed this week by the S&P 500. This is the first time in 2 weeks that this has happened, and we were still up 0.72%, which is actually not too bad, but the S&P 500 averaged a 1.55% return, so we lost to it this week, but we will be back next week for sure. Of course, like I said, over 8 weeks, we've outperformed by 8.48%, and annualized, we're looking for about a 49% return. Again, like I said earlier, this will level out later. All right, let's talk about politician trading this week. So things in the politician trading space have been kind of crazy. Of course, I'm tracking the NANC and KRUZ ETFs. And Nance this week, which is the Democrat tracking ETF, is up 2.74% this week, which comes out to 1.06% over the past month and up 22.93% year to date. And then Cruise, KRUZ, is the Republican tracking ETF. It is up 1.31% this week, 0.98% over the past month, and 12.49% year to date. And what's fueled those returns? Well, over the past 30 days, we've had 14 politicians make 354 trades, moving over $10 million. Now, you're probably thinking that 354 trades in a month seems like quite a bit, and you are so right. If you remember last week, we reported that there was just over 200 trades made in the previous 30 days from that, and so the number of trades are only increasing. And the craziest part is that over half of these trades have been sell orders from politicians, which kind of makes it seem like there's something fishy on the horizon. Now, that being said, there was a couple of buys that happened this week, and the largest came from Republican Laurel Lee, who bought between $50,000 and $100,000 worth of JP Morgan stock, which I am now going to rate as a buy opportunity. The ticker is JPM. You'll see in the newsletter a quick little graphic that I have. Again, thesimpleside.substack.com. You'll see a quick little graphic of the times that Laurel Lee has bought stocks over the past 2 months-ish. But basically, what it shows you is that she's pretty dang good at buying the dip. We've got some buys that happened around July 29th. Well, this was right around the bottom of where the S&P was sitting. Of course, it kind of bottomed out around, I want to say early August, And then she also has more buys that occurred right around September 9th, which was, again, another one of the bottoms that we had with the S&P 500. So she buys when the market is low. And again, that's why I'm going to put JP Morgan on a buy rating. Again, go look at that graph in the newsletter. You'll see what I'm talking about. It's kind of astonishing. The other 4 most recent politician trades, we've got Michael McCaul, Republican from Texas, who sold VOO, or VOO is the ticker, but the name of the ETF is the Vanguard S&P 500 ETF. He traded this on September 16th, and he sold between $500,000 and $1 million worth. $500,000 and $1 million worth. So that's pretty interesting to see there. Then we've got Pete Sessions, who's buying NVIDIA. You know, the Republicans, the Democrats, they both are buying, and they love NVIDIA. This trade value was between $1,000 and $15,000. Then we've got the Laurel Lee trade, and then we also have 2 trades from Pete Sessions, again, the Republican from Texas, who sold Altria Group, and he bought NVIDIA again. One of those buys was on the 16th of September, the other on the 10th of September. One for around $1,000, or both were for $1,000 to $15,000 in that range. All right, let's get into insider trading. Of course, this report tracks an ETF as well, just like the politician trading report. That ticker is SURE, SURE, and is up 3.38% this week, 3.2% this month, and 12.14% year to date. The most interesting insider buyer this week was Sumitomo Mitsui Financial Group. Of course, I'm saying that terribly, but it's a Japanese investment company. Now, they bought 4.5% of Jefferies Financial Group, ticker JEF, for around $59.67 a share. The stock is now trading at around $62 a share. And I believe the trade value on that was over $500 million. Now, this isn't common to see for insider trading. It's quite often that we see a couple tens of millions, maybe 100 million, but it's not often that we see something that's 500 million like this. So this is kind of a big deal, especially considering the fact that they bought 4.5% of the company and they're based out of Japan. But they also own a couple of other US-based companies like Ares, ticker ARES, Ares Management, ticker CME, and lots of bond ETFs, which I found interesting. Now, let's talk about JEF, or Jefferies Financial. They have great profitability and they have great growth, and they're on kind of a winning streak right now. They have a lot of momentum built up, but they have a terrible value ranking, That being said, I think the company does deserve a B- rating, but I don't feel comfortable giving JEF a buy rating given the poor value. Of course, this is looking at it from a price to earnings, price to equity, price to book. And so I'm going to be putting this stock on the watch list. Now, you should know by now that the watch list are stocks that I think are probably going to perform well, but I just don't have the conviction to say, oh, they're definitely on the buy opportunity list or whatever. Again, if you go to the newsletter, thesimpleside.substack.com, you can see that I've put a quick little graphic here that just shows you why the score is 80 out of 100, and it kind of shows you how the stock is distributed between profitability, growth, financial strength, momentum, and value. But again, no value here, and so just a hard time putting that on the buy. Now let's talk about the 4 other largest insider purchases. We've got BlackRock Innovation and Growth Fund, the BIGZ fund, which was bought $3.71 million by Saba Capital Management. And the stock is trending on the high side of its 52-week range, not super attractive. Then we've got Singular Genomics Systems. Oh, geez, what is that? Ticker OMIC, who was bought by Kevin Tang for about $1.81 million. Again, trading on the higher side of its 52-week range. Then we've got 2 more stocks, both trading on the high end of their 52-week range. Culp Inc., ticker CULP, a $1.46 million buy here as well. And then we've got BlackRock Health and Sciences, ticker BMEZ, with Saba Capital Management, who also bought their Innovation and Growth Fund. But they only bought around $750,000 worth of the BlackRock Health and Sciences, ticker BMEZ. So basically, the big one to watch here is Jefferies Financial. The other ones in here are just kind of iffy. They're all trading at their 52-week high or around that range. Makes them a lot less attractive. All right, now we get to talk about another little cool piece here. We've got executive trading and executive ownership in companies this week, at least with the top 5, grew by around 119%, not including a new purchase. And the biggest / most notable buy came from Jonathan Bubba. He's a director at America's Car-Mart. And basically, America's Car-Mart, he increases ownership percent by about 75%. So that's a huge increase, but I think this is somewhat of a terrible move. The company's planning to sell more stock because their cash flow is so bad they don't have the finances to cover their expenses. And so they're going to be selling more stock to cover this. Anytime that a company is selling stock again, it's just kind of scary. If they're not able to generate the cash flow to keep themselves afloat, there's only so many times that you can issue stock before investors start to get diluted too far and decide that the company is not worthwhile. That being said, it's a good time to have extra finances, just because the Fed did cut rates 50 basis points, and so that brings people into the car buying market a little bit heavier than if the Fed were to cut by 25 or if they were to cut not at all. Either way, I still think this is a terrible buy. And there's a couple of other interesting executive buys. We've got, of course, the Jeffries buy by Sumitomo Financial Group. But I'll let you guys go and check those out. I mean, nothing in here was too terribly staggering to me. Nothing jumped out at me other than this America's Car-Mart buy, which I'm just confused by. I'm not really sure what the idea is there. But it might be worth something checking out. I don't have it listed as a sell, a watch, or a buy opportunity. I just don't know how to feel about that trade. For the weekly highs and lows, of course, these are the top 3 and bottom 3 performing stocks from the past week. We've got Eyewear Inc. up 119%, Oil Corporation up 118%, and REE Automotive up 94%. Then we've got EQV Ventures Acquisitions Corp. down 100%. They probably got delisted. Then we've got JBDI Holdings down 95%. And finally, Corbus Pharmaceuticals down 65%. Now, I think something you guys are really going to enjoy are these weekend reads for weekday trades. And of course, I talk mergers and acquisitions, top investment ideas for the upcoming week, top contrarian trades or upcoming contrarian trades, and then I talk earnings price volatility. And that doesn't even mention all of the buy, watch, and sell opportunities that I list as well. Now, typically, information like this is going to cost you hundreds of dollars a month in subscription fees, but I do it all for you here in hundreds of dollars annually. So I'm doing this for less annually than others will charge you monthly for this type of information. And what are you going to capture down here today if you go paid in the newsletter? Well, I'm going to be talking about how you can make money on a triple witching. What the hell is a triple witching? Well, one just happened on Friday. And typically after these happen, the market reacts in a certain way based on what's happened for the last 2 triple witchings that have happened this year. So go paid and go check that out. You also have some early access to contrarian bets that I'm going to end up making. Again, I'm kind of slowed by releasing these portfolios, but got some contrarian bets coming out, and a quick little peek at what those are going to be is in there as well. And then we've also got all those actionable buying insights for the upcoming week. I think we have around 4 or 5 different stocks listed as possible buy opportunities for this upcoming week. So go and check that out. There's a little summary for the paying subscribers. You guys can go and read that. Get you caught up to date without reading the whole thing. Again, go check the newsletter out, thesimpleside.substack.com. Go paid. I have a bunch of extra information for people that go paid. I want to give you as much value as possible so you feel like what you're reading is worthwhile. And I promise you it is. Our returns speak for themselves. Again, if you have any questions, you want to see things change, you want to know anything about anything, feel free to reach out to me at any time, thesimpleside.substack.com. All right, guys, we will see all of you shareholders next weekend.